Do you remember what happened in 2011 with silver? It rallied all the way up to almost reaching $50 before collapsing once again, and it hit a low at $12 early this year. Back then, what drove silver higher was a weaker dollar. It was very strong demand for industrial metals out of China following the rebuilding after the global financial crisis in 2008, and it was a massive amount of stimulus coming from central banks around the world. Fast forward 10 years almost, and in 2021, we're going to see a repeat of this. What's the added dimension this time around is going to be the increased demand for solar panels and in general silver from industrial metal use towards the green evolution. We will see a very strong demand from China, we'll see increased demand from Europe, and with the Biden presidency now in the US, we could also imagine that increased demand will come out of the US. So the combination of a dollar, which we believe will continue to weaken, a vaccine that has killed the virus but not killed the mountain of debt that's still around, still flushing around the world, and also the risk of higher inflation, as we're already seeing now at the beginning of 2021. That combined with the green evolution will drive the silver higher, and we see the price double in 2021 and reach $50. For more details about this outrageous prediction and the 9 others from my colleagues here at Saxo Bank, you should visit goto.saxo/op21. Thank you.
Ole Hansen, the head of commodity strategy at Saxo Bank, dropped a bullish silver forecast for 2021. This week, we're going to dig into what more he and his research team had to say on the matter on their website. And other than that short clip, which I obviously borrowed and overlaid some charts on for context. Of course, we'll also add some of our own, more detailed, short and longer term contributing factors for silver bullishness 2021 and beyond. Hello there, on behalf of SDBullion.com, this is James Anderson. If you enjoy condensed bullion market updates packed with information, make sure you smash the like button here so the algorithm keeps feeding you our content. And, if you like, be sure to subscribe if you're looking to ride this bullion bull market unfolding before our very eyes. So we go to the article to see what Saxo Bank had to say explicitly about silver in 2021. It reads, "Silver has always been a wily beast for investors due to its dual precious metal industrial metal uses, and 2021 sees silver rising on both. That contrasts with 2011 when a proper bubble in silver developed on rank speculation linked to a tumbling US dollar and the Fed's seemingly radical monetary policy of QE2 from late 2010. QE scary? How times have changed. 2021 brings the usual suspects that power silver higher on its hard asset precious metals side as the US dollar weakens, and as investors are faced with the harsh reality of no relief in sight from negative real interest rates. This is exacerbated as inflation suddenly jolts higher in 2021 and policymakers are slow to respond, wanting to offer maximum support for their still recovering economies. With a COVID-19 vaccine in rapid rollout by the middle of the year, the excessive liquidity and over-easy policy drives a powerful bid into any hard asset. Turbocharging the rise in the silver price in 2021, even relative to gold, is the rapidly rising demand for silver in industrial applications, especially those driving the green transformation such as photovoltaic cells used in solar panel production. In fact, a real silver supply crunch is on the cards in 2021, and it frustrates the full-throttle political support for solar energy investments under a Biden presidency, the European Green Deal, and China's 2060 carbon neutral goal, among other initiatives. Another challenge on the supply side for silver is that more than half of mined silver supply is a byproduct of zinc, lead, and copper mining, making it tough for miners to meet the surging excess proportional demand for silver. Trade. Long silver as the price races to an all-time high of $50 an ounce in 2021. And while perhaps both early 1980 and early 2010 silver bulls watching this video might be rolling their eyes right now at yet another bullish silver call, we're going to examine a few important contributing and rhyming fundamental factors at play currently. Ones that Ole and Team Saxo Bank did not go into much detail over. In the viral bailout and central bank fiat currency explosion era ongoing, let's begin with silver's store of value or monetary demand in context. We all know the cliche is that silver is poor man's gold, and when gold gets into a raging bullion bull market, its value rises rapidly higher, silver eventually often outperforms gold over a short few-year time frame. A friend over at SRS Rocco Report published this superb chart, which puts this year's 2020 silver store value demand into record-breaking industry context. They state that for the first time ever, total silver investment demand exceeded industrial demand by a wide margin this year in 2020. Personally speaking, throughout my over a dozen years working in the bullion industry and studying physical silver and gold flows over that time, the prior year with massive allocation of silver supply going to physical silver investment demand was in 2015. Back then, about 1 in 4 ounces of silver flowed to store value and investment demand for the year. Here in 2020, that figure appears to have more than doubled. In 2015, it was mainly poor man's silver bulls with strong hands buying bullion and jewelry for the long term. Think of unhedged Eastern Indian silver jewelry makers and regular Western silver bullion stackers who bought regularly and heavily as the then silver spot price was bottoming out for many months of time in 2015. Now in late 2020, Ole Hansen and Saxo Bank failed to ask readers what happens next year if Indian silver demand reverts back to its 2010s average. If so, they alone would need over 100 million ounces or more of physical silver in 2021. That's over a tenth of supply. And yeah, they'll get to bet against increasing Western silver investment demand and likely increased Chinese, EU, and potential US solar demand all ramping up this year and in the years upcoming. Of course, the majority of this supposed 2020 silver bullion demand flow went to supposedly back silver ETFs and increasing the unaudited COMEX warehouse piles, where for many months this year, the futures spot price hovered well above the silver spot price, attracting an arbitrage opportunity for players in that fractionally reserved futures market. Could we, by the end of next year, 2021, see the gray spot price line ramp above the current blue line level here, as it once did back in late 2010 and 2011? Let's have a look back at what mainly fueled that 2010 and 2011 ramp in gold and silver values. I'd argue much of the then bullion price escalation was due to the then rapid expansion of the fiat Federal Reserve notes monetary base and Federal Reserve's balance sheet via both QE1 and QE2 programs then ongoing. Oh, and this also coincided with bankrupt Bear Stearns inherited JP Morgan, who was allegedly caught naked short silver on the COMEX at the time, and thus we witnessed a short squeeze that nearly took that bank's precious metals trading desk under. Fast forward about a decade and the M1 monetary aggregate pile is exploding, without a legitimate explanation as to what is really going on. Why is this rate of fiat US dollar pile growth exploding at record levels, making the 2008 to 2011 ramps look like child's play? Oh, and by the way, alleged precious metals market rigging JP Morgan and their clients appear to be ready to gain from silver's likely short squeezes upcoming. This nearly 200 million ounce pile is 2 times what physical and supposed silver market cornering Hunt brothers amassed before silver did its first run at 50 an ounce in January 1980. None of this takes into account how much silver the bank has siphoned and or lent back to the largest silver ETF they are supposed custodian of. The lease rates could be massive already, and reports are that JP Morgan is already making a mint in the precious metals market in 2020 alone, allegedly earning in precious metals this year alone what they were fined for a supposed decade of time doing in the precious metals market manipulation, where they were charged with Racketeer Influence and Corrupt Organizations Act, RICO in short. So while Ole and Saxo Bank's $50 an ounce silver in 2021 call is something that they term an outrageous prediction, there's really nothing outrageous about the silver spot price doubling, tripling, or five-folding, especially when faced with such rapid expansions in fiat Fed note piles, met with increased silver bullion and ETF demand as a response. The most outrageous thing is how still cheaply priced silver remains, faced with all the ongoing bullish facts that are building. Whether it be next year or the years following, silver's not only going back to 50, but beyond, as this systematically suppressed red-silver spot price line catches back up to the Eastern world's aggregated 5-decade price, which is already well into the triple digits per troy ounce. It reads 171 per troy ounce as of yesterday, December 10, 2020, and that begins from the start of 1970 aggregated to then. So, mind the current gap on this chart, silver bulls. This is truly the outrageous opportunity at hand. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.